Hello, thank you for clicking on this podcast. How long will the rental market stay hot? My name is Charles Roberts, and I am the president of Your Castle Real Estate. It's about a 500-person firm, and I've been investing in Metro Denver for about 20 years, and I help a lot of investors build wealth with real estate. So let's jump right into it. This is a question I get all the time. Okay, the market's been really hot for years. Vacancy rates are low. Rents are rising. How long? Is it going to just end tomorrow? Is it going to end next week? Is it going to end next month? We hear this all the time. We get the question. And if you have been watching a lot of my podcasts and webinars, you know I don't have a crystal ball. Anybody who says they do is lying to you. However, let's look at some of the data, because I do actually believe that the rental market is going to stay hot for a while. I have a portfolio of properties. I'm not selling my properties. You may want to sell yours, but here's why I would suggest you don't. Looking at this first slide right here, what you see is this right here is the vacancy rate by quarter for multi-unit properties, and it's higher for multi-units than for single families. However, the trends are the same. So this is 1981, and you go to 1992, and you move forward. And down here, what you see is the median rent by quarter. And what's not surprising is that as vacancy rates go up, median rents start to go down. And you'll notice, even if vacancy rates skyrocket, you don't see rents plummet. You just see them stabilize. Then in the early 90s, the vacancy rates went down, and the rents went up. And they doubled, more than doubled during this decade. Vacancy rates go up again, rents start to go down, and then vacancy rates go down, 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 and then this is what we've experienced the last 5 or 6 years, are the rents just skyrocketing in Metro Denver, going up and up and up and up and up. And this is what has been so great for the investors, especially the investors who had the timing and the ability to buy here when the market collapsed. That was a great time to buy, as it turns out. And then it turns out the vacancy rates went down, 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 and the rents went up. So what's the drivers of the Denver rental market? I see 3 different basic drivers that you as an investor need to understand. The first one is the population growth. The growth in population in Metro Denver. Pretty simple. That's the demand side. And then the changing demographics of the people who live here in Metro Denver. Again, the demand side. And then the third thing is the limited rental unit construction, the supply side. So let's look at all 3 of them and see what the market is doing. So this right here is data showing the population, the 2015 current population, and where it's going. And the good news is we are adding about 50,000 net people in Metro Denver per year. And that is why Metro Denver is a great place to invest, because the population is going up and up and up. We hit 3 million people around the fall of 2014 for the first time ever in Metro Denver. And right now we're going up about 50,000. I think in 2015 we went even higher, something like 60,000 people. The net went up. And what that means is, of course, more people who need housing and who need your product, which, if you're an investor, are units of housing. So this makes me feel very, very good about being a long-term landlord in Metro Denver. Our population is increasing, not decreasing. That's very important. And then if you look at the population of Metro Denver who is living here, what you see is that we have a lot of millennials and next gens. The basic thing here is that these people, if they're not living on their own now, they are going to be living on their own eventually in the future. 36% of millennials currently live with their parents. To me, this can only mean more demand for our product, rental unit housing. So not only are more people coming to live here in Metro Denver, well, the great thing is that they're not just coming to live here, but the people who live here are also going to be an exploding growth. And this is the people who are going to be buying our product, which is rental units. It's very important to understand. This slide is pretty complicated, but what we're talking about here is the United States overall. This is the home starts per 1,000 people, what the average is, and what I want you to see is that Denver is very, very low. We are not building a lot of units in Metro Denver. This right here has been the average over the years, If you see highs and lows, and here's where we are. So even though you see some cranes out there and you see some building, overall, statistically, we're not building a lot. And that once again means that if you own rental property, that you are going to have a lot of demand in the future as you do currently for that rental property. If you look right here, this is a great slide. This shows what happened during the downturn. This is total housing permits in the Denver metro area. So you see back here during the big bubble kind of times, 2000, 2002, 2004, lots of building going on. And what you see is the red are for lease building units and the blue is for sale. Well, everything just collapsed during the downturn. In 2009, we had so little building. And yes, we've definitely recovered to some degree, and we have more building now. But what's really interesting to see is that the number of for sale units has not climbed too high. And what that means is the value of properties that we own is actually going up because we're not building too much. And we're making money because the value is going up. There is more demand than supply. It's really important to understand. Certainly, there is construction coming along, and that's good. That's good for a healthy economy. Over here, this is a really important point as well. This is the Affordability Index. And what this means is, had you had perfect timing, you would have bought potentially 2008, 2009 when homes were very, very affordable. The prices, however, have gone up in the last few years, and we're down to about right here. So what it means is this shows how the prices have gone up and homes have become less affordable. The good news for you as a landlord is as housing becomes more expensive, guess what? Next best thing to buying a house is to rent, and these are your customers. If your customers can't afford to buy because the affordability is plummeting, and it is plummeting as prices rise, never mind when and if interest rates end up going up, that is only going to help the landlords, because if people can't buy, if they can't afford to buy, then they're going to rent. And whose properties are they going to rent? Well, hopefully yours. If you bought properties and you held properties, what you're going to find is you're going to have more demand. So just to kind of talk about this again, all the demand is coming from the increased population in Metro Denver, and then the population that we have, which is going to be the population that is actually in Metro Denver that is going to be coming out of their parents' homes and growing up and starting to rent. And in this case, the people who would like to potentially buy but simply can't afford it anymore because prices on homes are getting so high, they become so affordable. And if they can't buy, they're going to rent. Really important for you to understand that as a landlord. This is a really interesting slide as well, going back a few years, talking about how during this period of time, people were buying, okay? This orange are people buying, and we actually had a falling number of renters because it was so easy to buy. But then the whole world switched right about here, and then we had lots and lots of renters going forward and few buyers. And this is still continuing, partly because of the lack of construction in Metro Denver, and partly because the prices are going up. So the sum total of this is that there are way more renters, and that's going to continue in the future, making life good for landlords. This slide right here, really interesting slide. Let me walk you through it. What this is talking about is 2015 numbers today. This is 2015. And this is 2025. And take some time and look at what is happening. This is the 10-year change. So for example, in 2015, we have 3 million people in Metro Denver. This 3.5 million is what's predicted is going to happen in the next 10 years. That's a 500,000 change. And 50,000 new people per year. Just basic math. We're adding 50,000 new people per year. Talking about, say, 2.5 or so people per household. So the number of households currently in Metro Denver, around 1.2 million, and it's going to go to about 1.5 million. It's real simple. We're going to add about 300,000 households, or about 31,000 households a year. And because we have a 65% owner occupancy rate, that means 35% of the new households, which is that, are going to be renters. So let's look at it. This is the renter households in 2015, and this is the renter households in 2025. We're going to add about 109,000 households, and that is 10,000 households a year, okay? What this means is that while we have about 8,000 apartments under construction right now, we actually need 11,000 just to maintain where we are. And for homes, we have about 10,000 under construction, and we need about 20,000 just to keep up with the current demand. That's what's so incredible about this, is we aren't even keeping up with the current demand. If you think about that, that means that we are not, in my opinion, going to see any sort of bubble in the rental market or in the sales market for a period of time. How long that will be, I don't know. But sooner or later, we would assume that the construction will at least keep up with the current strong demand and will maybe overcome it, and then we might start to see a market turn. But for now, we're not even keeping up with the demand. Very, very important for you to understand that. And that's why when my clients who bought a lot in 07, 8, 9, 10, 11 and bought a dozen or 2 dozen properties, they come to me and say, maybe I should sell now. I say, look, I'd be happy to be your listing agent, but I'm just not sure. I think a long-term investment is where to go, and let me explain to you why I don't think the market is going to change for quite a while. And this is one of the things we look at right here, is said, you know what, we're not even keeping up with the demand. We're going to have a lot of demand for our units, I think, for a lot of years. So to sum up, this means that housing construction units are far from what's required to meet the population growth, okay? So as a result, low rental vacancy and low for sale inventory conditions are likely to continue for several years. Bottom line is we need to add 31,000 housing units a year, and we're building at half that pace. Basic economics. We're not even keeping up with the current demand. Really, really good if you own properties and you're a landlord. So the result, here it is. Pretty simple. High population growth. We talked about that, adding about 50,000 people a year in Metro Denver. Changing demographics, a lot of young people who eventually are going to move out of their parents' homes and start renting. Limited construction. We're building about half the number of units we need just to keep up with the current demand. What does that equal? Low housing inventory. And that's exactly what we've been experiencing for years now. We're getting into our 7th year of this. And of course, for you, the reason you're listening to this is that means it's a landlord's market. It has been a landlord's market for years. I believe that is going to continue for a number of years. Is it 1 year? Is it 5 years? Is it 7 years? I can't say, but what I can say is that by looking at these numbers, we are going to have a good idea of when it starts changing. And that's what we'll be talking about a lot. But for now, I'm not selling my properties. I don't advise people to sell their properties. I advise them to think long term and to take advantage of this landlord's market. So, thanks very much for listening and staying with me. This was a lot of fun. I love talking about this stuff. Again, this is Charles Roberts, president of Your Castle Real Estate. If you have any questions on this, I am more than happy to answer them for you. I help people build wealth with real estate. That's what I've done. That's what I do with my clients. Give me a call, send me an email if you have any questions. I can sit down with you, assess what your strengths are, what you might be doing. Happy to answer all of your questions. So feel free to reach out. Thanks very much.